afternoon, ladies and gentlemen. Welcome to another investor briefing. I'm your host, Damon Wiley, General Manager, Asset Management. Today, we'll be discussing Supreme Ventures Limited year-end results. We are joined by Gary Peart, Executive Chairman of Supreme Ventures Limited. Also on the panel with us this afternoon is our CEO, Patrick Bataille, and Melissa Jones, VP, Relationship Management. Welcome, guys.
Thank you.
If you're a regular viewer but haven't officially joined the family yet, now is the perfect time. Go ahead and hit the subscribe button and turn on notifications so that you never miss a beat. Also, make sure to stay with us until the end of the program, where we have a live Q&A segment coming up where Gary will answer all your questions. Go ahead and drop them in the chat and we'll get through as many of them as we can. It's about time that you embark on your investment journey. Patience wins investment game, not speed. That means the earlier you start, the better. Why not take that first step with Mayberry Investments Limited? Follow us on social media today or visit our website at www.mayberryinv.com to get started. So, turning to our results, we see where revenue momentum is intact as total gaming income surpassed 55.5 billion, which is a record for SVL. Last year it was 52.7 billion. Operating expenses fell to 8.7 billion from 9.1 billion in 2024, which shows a $373 million improvement. SVL delivered earnings per share of 70 cents for financial year 2025, a 3% increase year over year, as net profit to shareholders of 1.85 billion reflects disciplined cost management and reduced taxation. The group maintained a strong cash balance of just about 1.4 billion and distributed 1.8 billion in dividends to shareholders across 4 tranches during the year. Turning to our income, we have total gaming income, as we said, of 54.5 billion, which represents a 3.5% year-over-year increase, and as I said before, that's a new record for SVL. Gross profit of 12.2 billion shows a 22.3% margin versus 23.4% in 2024. The selling, general, and admin expenses are also down 4.1% to 8.74 billion, which, as we said before, shows a disciplined cost approach to operating a business. We move on to our segment performance, which shows a breakdown of how this 54.3 billion was attained. We have non-fixed odd wagering games at 33.7 billion, pin codes at 14.2 billion, sports betting of 15.1 billion, and lottery at just about 3.9, just almost 4 billion. So again, 2025, 54.4 billion, 2024, 52.6 billion. Non-fixed odds wagering expanded 3.3%, and fixed odd wagering net of prizes rose 3.8% to 20.8 billion for 2025. Turning our attention to the balance sheet, we see where total assets rose 9% to 23 billion versus 21 billion reported for 2024, and our equity is down 5% to 5.1 billion relative to 2024's 5.3 billion. Showing the profits for the last 5 years, we see where profits are increasing, which is a great thing for 2025. So we hope that that trend continues, and we hope that we'll get back to that $2.5 billion mark in 2023. So we can look out for increased improvements as we are seeing 2025 over 2024. Moving to our share price, we see where, as at the end of January, this closed at $17, and I think that today the stock price closed at $17.10. So again, we see where our stock price is moving in the right direction, along with our profits from SVL. And with that, I'll open the questions to Gary, and I'll start out with an easy one. A significant portion of... Sorry, go ahead, Gary.
I was just laughing at the word easy.
A significant portion of the new debt, 3.9 billion, appears to be at variable rates, representing a new risk exposure not present in 2024. What's the average interest rate on this variable facility, and how does management plan to hedge this exposure if rates rise?
Yeah, good question. So fortunately, the variable rates has benefited us in the instances where we can benefit fully from it, in that most of them are based on WACB plus a spread. And I believe it would normally, right now, they're about 8.1, between 7 point something and 8.1. The problem is that I think one of the major loans actually had a floor in there. So we haven't been able to benefit fully from that variable rate. But in terms of managing it, we prefer the fixed rates, which is why we had a floor and a ceiling, because at the time, the feeling was that rates might have gone higher. And based on our margins on the variety of products that we have, which is in excess of 20 to 30%, working with a fixed rate anywhere between 10 and below will always be accretive for our earnings. In the event of any spike, we usually carry sufficient cash to be able to pay out those loans and move forward. The good thing is that 2026 is going to be, I think, probably the best year in SVL's history for a variety of different reasons. And one of them is that we expect some liquidity events, which would allow us sufficient liquidity to start paying down the debt portfolio that we have. So that's the fundamental way we would manage it. Ultimately have cash on hand to pay down loans, which if the interest rate tends to get out of whack.
Okay, all right. I have another question here, Gary, just on paying out. So last year you paid out just about 1.79 billion in distributions in 2025, up from 1.64 in 2024, while net profit attributable to shareholders was 1.85 billion. So a payout ratio of approximately 97%. How does the board think about sustainability of this level of distribution given the increased debt load and ongoing capital investment needs?
Well, that's one of the ways I keep my job, to be able to maintain 90+% dividend payout. It's pretty difficult in the sense that, I think I've said it before, SVL used to be this, for a better word, incumbent that, just generated cash and they're good to go. They're a mature business. Certainly since this investor group has come in, and certainly since I've been chairman, we have been expanding strategically. And so it's rare for you to have a company that's expanding. You see the top line growth, which is pretty impressive over the period. We've been expanding, but yet still we maintain the high dividend payout ratio. The 97% that you refer to, I mean, again, it sounds even much higher. But if you take a closer look at our results for 2025, especially if you look on the cash flow statement, you'll actually see that we generated $1 billion in additional cash relative to 2024. So we had a lot of provisions, non-cash provisions in 2025. And that's why you kind of see the skew between the percentage dividend payout and the actual accounting profit. Bad debts, certainly after Melissa, that kind of increased, but you're taking non-cash, the provisions are non-cash. So the company has significantly more cash than the accounting profit. And so that's why we're able to, that's why you see, for want of a better word, that anomaly, where, it seems as though we've paid out 97%. Not seems, we've paid out 97% of the accounting profit. But in terms of cash generation, it's materially less than that.
All right, great. I'm going to turn it over to my panelists, and we're going to go beautiful before brains. So Melissa, you can open the floor for us. What questions you have for Gary?
Right, thanks, Damien. So, looking at revenue sustainability for Supreme Ventures Limited, so Damien said it over and over again, 54.5 billion record gaming income for 2025. But what portion of growth came from higher betting volumes versus structural expansion in the player base, and what actions are planned to improve margins going forward? And then looking at your earnings outlook, earnings per share growth was modest despite these record revenues. So, what operational or strategic initiatives are expected to materially increase earnings per share over the next, say, 12 months to 2 years?
I can tell you what we're doing for 26. As I said, 26 is likely to be a breakout year. I alluded to it, not alluded to it, I've been speaking about it for certainly for most of 25. The result for 25 would have been significantly better if we didn't have Melissa. So far, the estimates that we have lost about $4 billion, give or take, in additional revenue due to Melissa. So we're normally able to grow our top line by an average of about 8%. In a good year, you'll get double-digit growth. And you'll see, notwithstanding it being a record, it's only a growth of about 4 point something percent. It's normally closer, as I said, to 8%. So the income should have been somewhere closer to $60 billion. What that means is, given our margins, at $4 billion, you probably would have converted about 1.2 billion of that to profit. So we could have easily made $3 billion if it wasn't for Melissa. And we were tracking that. We were expecting to have a really, really good fourth quarter, but you have to deal with the realities of life. And it turned out the way it turned out. We were very happy to be able to record a small profit for the December quarter, because we'd have lost money in October, lost money in November. And so what it means is that the losses in October and November, we're able to offset them based on December's profit, which is great. We expect to see that momentum going into the first quarter and increasing as we get back to normalcy. As I indicated in the chairman's statement, it hit out about 30% of our revenues. And I think where we are now, we still have about another 10% to go. I think we'll be fully recovered from Melissa by, I would say, June, sometime in the second quarter. Mainly my gaming business, or my box business, impacted a lot. We have a lot of boxes in the affected areas, which again, this is coming after Melissa, which had impacted those areas again. So, we rebuilt it. It's hit down again. I have to rebuild it again. So we think that all of those areas will do pretty well. But the biggest thing for 2026 is going to be, we have strategically been investing in a lot of stuff, primarily software development, and some other product lines. And this has been going, I would say, from pre-COVID. And thankfully, knock on wood, we will now be in a position for 2026 to start to roll out a lot of those investments, and more importantly, start to earn revenue on those investments. So you'd have heard that we got a remittance license. We started last year with 6 locations. As of January this year, we're up to 20 locations, and we expect to be closer to 80 locations by the middle of this year. We expect to get a full complement by the end of the year, and so that will start to drive significant revenue. So, in short, for the last, I would say, 5 years, we've been carrying losses in these subsidiaries as we get them to fruition. And for a variety of reasons, we haven't been able to execute. I mean, from a regulatory perspective, you have to follow the processes. It took a bit longer than we expected or anticipated. But, we're getting there slowly but surely, but we're getting there. We should have a major announcement, I would say, by April of this year, which would be a further game changer for SVL. And again, that would be another key strategic initiative that is coming out of Follow Better out of the lab. And we'll be able to offer it to the public, which will materially increase the efficiency of the business for 2026 and going forward. So those are the plans that we have. I mean, you mentioned over 2 years, but a lot of those initiatives were in the making. And as I said, 2026 is the year for all of those initiatives to come out. Well, all of those plans that you asked about, within the next 3 to 4 months, you're going to see the impact and benefits of it.
Sounds good. Patrick?
So we've talked a lot about the impact of Melissa. Gary, I'd love to hear your thoughts on what's going on in Ghana, contribution margin, profitability, and are there any other plans to expand in Western Africa or continental Africa?
Yeah, good question. At the AGM last year, I believe I had indicated that our business in Ghana is now profitable. We've worked with the client, and we continue to work with the client in that the core business is profitable, but we're now looking to scale the business. We've put a lot of different initiatives out into the marketplace. The client's business after promotion, has not achieved profitability, but our business as a technical advisor for 2025 actually recorded a profit. It's not what was expected. For some businesses, it would be seen as material, but it's a nice profit nonetheless. But the core profits are what we're working on, and we have some significant opportunities that over the next 6 months we're seeking to execute on, and that will give us not just us but our clients sustain profitability. Because that's where once you get up to scale and people understand the game and we go forward, it's going to do pretty well. In terms of expansion on the African continent, yes, we have other plans to do so, but we also have we have opportunities in I would say in all the continents on the planet, with the exception of Antarctica at this point in time. That's the beauty about having the software development. We can provide the advice, and once we have a customer that we can help to achieve profitability, then we'll have the ability to expand the business. So we look forward to, I think for 2026 again, we should have at least 1 or 2 interesting releases where that is concerned. Because we have found a more efficient way in which to diversify outside of Jamaica, and that will allow us to take on more customers as we go forward.
Thank you.
There is I observed something, Gary, where operating profit declined by 6.7% to just about 3.32 billion. The group's revenue mix seems to be shifting toward lower margin products. If this is the case, is that intentional or is just a flash in the pan, so to speak?
No, it's not the intention. So strategically, we have some complementary businesses. So, for example, we're the largest distributor of phone credit. It drives a lot of revenue at relatively low margins. We did very well post Melissa, because you can imagine everybody wanted to be in contact, and we were happy to be able to meet that demand at the right price, and we continue to sell at the right price. We don't allow our retailers to add a margin outside of what the telcos ask for. We've gone into remittance because it's very complementary to what we do. Our agents, they receive a lot of cash, and whilst they're supposed to pay out winnings with the cash, there's still a balance that they would have to lodge. So what the remittance business does for us, even though the business itself might not have as large a margin as the gaming margin, it allows the operator to be able to disburse cash, and ultimately that reduces their costs and our costs as we go down the road. But when you blend them, it might give the appearance of your products having a lower margin. But our margins continue to be quite robust, and I expect to see the dollar value of that increase certainly for 2026.
Okay, thank you, Melissa. Alicia.
Thanks, Damian. Gary, so you spoke about the growth strategy for SVL earlier, and you spoke about some exciting news. A little birdie told me to ask, what is Supreme Life?
The birdie didn't tell you what it was?
No. I'm hoping you will sing.
I see. And so Supreme Life is our core platform. And, ultimately what we want to do with Supreme Life is that, once you're a customer of SVL, we'll be able to achieve whatever, you'll be able to achieve whatever you want on Supreme Life. And that's what I refer to when I talk about certain developments, because we're putting different businesses on the backbone of Supreme Life. It handles significant amount of transactions daily, and it's built to handle probably 1,000 to 10,000 times more transactions than what we're doing now. So we need to find businesses to put on this platform, wherein once a customer comes in, you don't need to go anywhere else. So currently, you have the gaming products, which everybody knows, Supreme 4. You have the phone credit. We are into bill payment. You have remittance. And we have some other businesses that we're going to be putting on top of that. As I said, there'll be a major one within the next 3 to 4 months, which is, as I said, is going to be a game changer. But it's just a part of that strategy of what the Supreme Life is. Our fintech subsidiary, which is headed by Delroy Anderson, he's charged with identifying these digital businesses that will be on top of the Supreme Life platform. So, we've had microfinance there, but as you're aware, we've recently entered into a transaction with Dollar, and as Dollar confirmed last week, we have come to an agreement. So that side of the business, we're seeking to, divest the actual microfinance business, but a part of the transaction is that Dollar will be able to use our infrastructure, etc. There'll be more details of that as we go down the road. But in short, that's the platform we expect every Jamaican to participate on. And we want to have all the services and businesses that can be had going through that platform. And that's where we think the true value and a lot of value will be driven for SVL.
Thank you, Gary. Melissa kind of preempted us because that question came out of our live chat from @Rasta1412. I think that person might have some information or understanding about what's really going on.
Or maybe that's the birdie.
Or maybe that's the birdie. We have a couple of questions.
Well, I mentioned it in the past. It's just a lot of people don't pay attention to it.
So we have a lot of questions here. One of them is from JJT2210. Can you explain the over 400 million impairment loss on financial assets? Is it a one-off?
Well, he can tell me. I can tell you what it is. As you all know, we have an equity stake in Main Event, a 10% equity stake in Main Event, and 15% in Dollar. And 99% of that figure has come based on the reduction in the share value of both Dollar and Main Event. So remember when I said to you that we've generated $1 billion in additional cash year over year. That 400 million that you see there, that's a non-cash write-down, which does not affect your cash, but from an accounting perspective, you have to reduce put a charge on your P&L. And so some analysts look on and would add that back because that doesn't affect core. But in another way, that loss has been put into the numbers. So then the question you should ask yourself is, where do you see the price of Dollar for 2026, and where do you see the price of main event for 2026? If you think it can go lower, then we'll record more losses. If you think it can materially go the next way, then we'll record profits.
Gotcha. We have one other question here, which is kind of touching base on what you had brought up before, which is that the electricity outages out west would have affected your retail network, which you've clearly stated. The question is, can you speak to the current status of post-Melissa recovery and how much this will affect profitability? So you already answered that part, but can you give us an update on the post-Melissa recovery?
Yeah. So one of the things we learned from Beryl, and one of the major things we learned from Beryl was having Starlink is a critical and crucial asset in the Jamaican market. So coming out of Beryl, we had stocked up on some Starlink equipment. Certainly since Melissa, we've added more, and that has really helped with bringing up the communication across our network. As I indicated before, I think over 30% of the retailers are impacted. We're about 10% now. We're working with them to bring them up as quickly as possible. And I have to thank the team at SVL because we had done a lot of outreach with them, certainly for the October, November, December period. And that had generated some costs. I mean, at the end of the day, you want to help your family, you want to help your average man, etc. But it comes at a cost. We have willingly taken on that cost because today for me, tomorrow for you. But it has had an impact on the quarterly numbers. Going forward, I think the year has started with less sales than prior period. But our business is about what the price payout is. And we're looking forward to a very robust first quarter because we see a lot of people playing the games, and we like the outcome so far, and it will continue to have positive outcome. Another aspect in the final quarter, we had some games that gave prize liabilities in excess of 100%, which was so coincidental, if not timely for those players, because right after a hurricane, that's what you'd want to see. Where you're beating the house, and they beat the house for over a month in November, much to their benefit. And we're very happy that those punters were able to benefit significantly during that period of time. But we're returning to normalcy. We, as I said, we normally would see a minimum of 8% growth in our top line revenue. For 25, it's just almost 5% because of the hurricane. And I think you'll catch up for 26. So I wouldn't be surprised if for 26 you see double-digit growth. If we get double-digit growth, then we probably would challenge the record profit that we made 3 years ago. So we, as I said, 26 is a year because a lot of those subsidiaries that we've been carrying losses in, the expectation is that we would minimize, if not eliminate, a lot of those losses and actually replace them with profits for 2026.
So Gary, another question from our live chat at David Rose 7686. Can you give a broader update on the remittance and bill payments in the last year? What's the take-up been like from your client base, and how do you plan to expand?
The take-up has been good so far. We for most of 25, we only had our 6 locations. Which are our 6 Cocoa stores, company-owned, company-operated. And on a per-store basis, they would have ranked very close to the top 10 of that remittance company's business. We have since been trying to bring on third parties, but there's a process to go through. So, for most of 25, you had 6 stores. As of January, we're now up to 20 stores. Going through the process to bring stores on board. We expect by the end of March to be closer to 40 stores. But we will not get to our optimum distribution, I think, until about November of this year. which is probably close to 100 stores. Again, that is subject to regulatory approval, etc. So we've seen positive uptick certainly for the months of October, November, when remittance edged up, but that may be coming down a little bit, and we're seeing some of that as well. Once we get this next phase of the strategy in place, which is again within the next 3 months, that's when it will be good. It'll be a good time to judge, how well all of these things are going. Because ultimately we feel these services will be complementary and people will move money across the different platforms, etc., to achieve their objectives. So it's early days because we haven't gotten the full complement, but we're seeing activity, we're seeing transactions being driven there. Our cocoa stores are doing pretty well with it, and then there are several locations that's coming up to speed. So I'm very optimistic. But as I said, 2026 is the year for that.
All right, I have one more question for you, Gary, before we let you go. The loan to Game Park Limited in Ghana has grown from 1.1 billion, 1.19 to 1.77. This is an intercompany loan to a third-party operator in a frontier market. What's the security on this facility? When is it expected to be repaid, and how does management assess the sovereign and counterparty risk?
So primarily the customer has a license, and Game Park has a 10-year license. There's a value that's ascribed to that license, and the value that's ascribed to that license is multiples of the loan. So Game Park can sell a license and pay off a loan. That's one aspect of it. The second aspect of it is, thankfully, Game Park at its core is now profitable. We for the last 4 months of the year, we were pushing a very strong promotion just to acquire customers. I mean, that's what you do in our frontier market. But thankfully, the month of January, because after December we've pulled back to reassess and come again. And January they had their first full month without promotion, and they were profitable. So out of profits they'll be able to pay down the loans, but fundamentally the value is in the license, because it's very difficult to get a gaming license in Ghana. In fact, it's very difficult to get gaming licenses, period. The fact that I can sit here and say to you, listen, we have the opportunity to go into several different markets. It's not usual, it's not normal, because it's a very difficult thing to get. So as I said, the value of that license is the fundamental security, and that license valuation is materially above the value of the loan. That's primary. And secondary, as the company becomes more profitable, they'll be able to service the debt. So we have no concerns around that. And more importantly, our auditors, if you look on our audit report, the auditors look at it every year and assess it. And so far, we're good to go.
Gary, one final question that I think investors would definitely be interested in.
It's just been 30 minutes.
Okay, great.
Oh, well, we have a whole lot more can ask.
Well, we have a lot more.
Yeah, I thought it was an hour, but if you insist, if you want to send me home early, that's fine.
So for investors looking at dividends, the dividend history. So I know last year SVL would have paid dividends at least 6 times. So we want to know how stable are dividends and what factors could cause it to increase or decrease.
It's one of the conversations I have with my team and my board, right? There's some things that we do at SVL, especially my wonderful team at SVL, that people, I don't want to say they take it for granted, right? But we've just come through one of the worst hurricanes in the history of hurricanes, right? And it's been a year after we suffered another hurricane, right? So our ability to recover and get back on track as quickly as we do is not normal. I mean, if I didn't have the team that I had at SVL, it just couldn't happen. I was speaking to a stakeholder at Caymanas, right? And the usual thing they ask about purses, etc. I'm like, but guys, you behave like you didn't. There isn't a cost for the hurricane, right? For burial, we were back operational in less than a week. It cost 300 million. In the case of Melissa, we didn't start back for about 2 weeks, but the track, etc., was fine. The reason for that is that you spend a lot of money to get things in place. It doesn't just happen just like with a click of your fingers, right? And nobody appreciates, in my mind, the cost that's associated with, right? So the cost of maintenance, the cost to get these things done, it's not up in your face, right? But it exists. And so, it's part of the cost in the last quarter of 25 that's just rolled up in a myriad of other costs, the cost to get things back up and running. We've been able to do that pretty well. And from where we're coming from, we're looking at ways in which how do we get better. So in the case of Beryl, we learned from Beryl, as I said to you, we started to stock up on and let our retailers know that the benefits of Starlink. So by the time we got to Melissa, some people had it already. We just need to buy additional and we go down the road. Another key area that we're going to put into practice over the next 2 months. SVL has one of the longest cash cycles for retailers. So most people in this line of business, the retailer has a day to send the money to them. So, whether it's a gas station business, whether, these guys have security for you. At SVL, once you get a retail location, your bill is 7 days after you've built up cash. So you start on Sunday, you don't get an invoice until the following Sunday, and then you're expected to make the payment by Tuesday. So that's what 7 and 2, 9 days, or almost 10 days. And some people will take 14 days, and sometimes even longer, right? And then so what you find is that when you have these events like Melissa Burial, they have your cash, and you don't have a crisis, right? So you know what's going to happen, right? They're going to use your cash. And so invariably, we always see an increase in our bad debts after these types of events. And again, if you look into especially the cash flow, you'd have seen that over the last 2 years, we have provided almost $900 million for bad debt, right? And the majority of that is for the retail locations that we have. And so for 26, we're putting in some initiatives that's going to materially reduce the requirement and provision for those provisions. So we're going to collect our cash faster. We're going to collect our cash. We're not going to leave it to some retailers to large money. And those kind of things will drive efficiency, and efficiency will drive profitability. If you dig into our numbers, you will notice that there is a material increase in our interest income. So we have a treasurer, I won't call her little, but we have a treasurer, Shauna. And Shauna is primarily responsible for that because she has a KPI to aggressively invest our excess cash. And so, we've found a way to do it. And as I said, that has moved from, I think, 40 million to over $200 million. And we can do more, right? So as I said, I mean, when you have team members like Shauna, etc., that's able to create this kind of value, then we can do significantly more. So we try to learn. We have been learning. An area that I thought you guys would have asked. Our staff numbers. For the first time in the history of the company, we have actually recorded a reduction in year-over-year staff numbers, not numbers, in terms of the figures. I believe it was reduced by just under $200 million. And again, this is where we've just gotten tighter in how we manage that side of the business. And we have gotten sustainable benefits, and it's not just we have gone through rationalizations, etc., but there are other aspects of the business where we've been able to do that. And, you know, we've seen that reduction, notwithstanding the fact that we have actually given a lot of grants to staff who were affected by the hurricane in the fourth quarter. You know, so, you know, everybody is pulling together, and when we're doing that, we're seeing those benefits, you know, going down the road. You know, going into the last quarter where things weren't so vibrant, you know, we had a massive benefit from, you know, marketing, where we're reined in marketing, and we had a material reduction in the marketing budget without impacting negatively the brand and its execution, its awareness, etc. You know, so, you know, a lot of effort by the team. I mean, I have to shout out the team, you know, to get us to where we got. So even though on the face of it is 20 million more, when you dig into it, the one-off provisions that are not likely to reoccur, the one-off stuff relative to year before. I give you an example. We got a one-off benefit in 2024 of $450 million. That figure moved the profit from 1.2 something to 1.7 billion, but it was one time, and it didn't reoccur in 2025. So, you know, when you look on the numbers, if you adjust for that, you're looking at, just from your core business, an increase in profitability from 1.2 billion to 1.8. And again, if you look on the 1.8, you know, we have had provisions in there, one-time provisions in there, almost to the tune of $900 million. You know, so it takes a good analyst to go through and take a look on these things. And if you analyze it that way, a stock price at $17 is a giveaway. You know, so, you know, I just can't hurry up to get, because now that I'm out of blackout, I can now buy the cheap stuff. But, you know, if you analyze it, you know, it's not a 70 cents performance for 2025.
Absolutely not.
Yeah.
Right? And, you know, the different analysts will have their say. They can do their analysis. But as I said, take some time, allow me to buy up the cheap stock before you come to the realization. But the result for 25, all things being equal, the Melissas, etc., in my opinion, has been exceptional. But the proof of the pudding is in the eating. I think 2026, knock on wood, without any stress, you'll see the true colors.
So we have another question here, Gary, from our online members. Last year you mentioned the refresh of the Scratchers game at your last AGM. How is that process going, and how do you plan to expand the market up to take of your products? Example, just bet with the 2026 World Cup, etc.
So again, you hear me keep alluding to 2026 being a breakout year. As you all know, the largest sports betting event is World Cup. Every 4 years it comes around, and that's massive. And, you know, you'll see it in our numbers. We always make an outsized benefit from the World Cup. We have a lot of promotions that are being planned, you know, and it'll be exciting as usual. I mean, hopefully this war ends so that we can really focus on the football. But, you know, we still expect it to be a great spectacle that we will definitely benefit from. With the Scratchers, you know, Scratchers is one of the few games that we don't own. We own all of our other games. Scratchers is actually fundamentally owned by our software provider, Brightstar. You know, so we just earn a fee from Scratchers. You know, passing Kristen picked me first, so we're more excited about the other products that we own and have a larger margin on. But there is a space in the market for instance. And, you know, one of the things at SVL is that we're always listening to the customer and trying to give the customer what they want, you know. So we ramp it up. We do different promotions from time to time. But, you know, the core of our product portfolio is what we focus mainly on. You know, we had a challenge the first time we launched it, and, you know, the dealers weren't able to manage and reconcile properly, so it fell away. We've worked with our partner. We've kind of fixed that side of it. And so we're seeing a rise in the sales. It's not as quickly as we would want. But ultimately, there's a finite dollar, right? And we're always on the lookout for cannibalization across different games. And it's one thing if you own a game and it's cannibalizing your game, but if the game is owned by somebody else and it's cannibalizing your game, you have to kind of manage that side of it. But instance is there. As I said, it has its place. And will it be as big as Cashbot? I'm not sure. But if we can get it there, definitely we're definitely be happy for that to happen. But we have other games which are constantly and consistently growing. So even Cashbot, Cashbot is what drove a lot of the increase in revenues. That 2 billion odd increase in revenues, material percentage of that came from Cashbot. So that's what we focus on, and make sure that it continues to create value, and then also the other games are there for us to generate value as well.
Hi, Gary. Another question that investors would be interested in is the debt and capital structure of SVL. So when we look at 2025, the group raised 5.1 billion in new long-term borrowings and repaid 4.2 billion, but the long-term debt increased from 4.2 billion to 6.9 billion. What is the capital being deployed into, and what is the targeted return on that investment?
So we've borrowed money over the period. My numbers suggest that the net debt has actually gone down based on the cash that we have. The gross debt has probably increased by about $200 million. So we manage that portfolio to give us our best outcome. Interest expense is tax deductible, so that helps us with our tax planning. Ultimately, when we were doing Ghana, we borrowed $3 billion to roll out Ghana. As you guys have indicated here, to date we've only used 1.7 billion of that, and based on where the business is, you're actually seeing the demand for cash in Ghana being reduced, because the first year was 1.2, 1.3. It's only increased by $500 million for 2025. And as I've indicated, we've gotten to profitability. So, that number would only increase if we need a major marketing push to bring a material number of customers on board, which if we need to do that, we will do that. But the bigger point is, we are projected to spend $3 billion. To date, we're only at 1.7. So that aspect has worked. We have other investments that we've made. Investing in software, it's a long tail. So we have a lottery software that we use in Guyana and we use in Ghana. And we are now earning revenue from that software. The reality is that we can put significantly more customers on that software. If we do it, the payback of that debt will be much faster. Outside of that, we have invested in other stuff that the indications are a couple of them should mature in 2026. If they do, we are expecting a relatively large liquidity windfall, which ultimately would be used to retire some of the debt. It's very likely that my board will want a one-time dividend if those things manifest itself, because they will say that we know how to run a business whilst paying out 90% dividend. But yeah, so those are some things that, whatever we've used the debt for, the value is there. And, we've structured the debt over the next 5 years. Some of them over the next 2 years, that the plan really is to materially reduce them when we get there.
Another question I'd like to ask is, we know the risk that natural disasters can pose to the business, as we've seen with Hurricane Beryl and Melissa, but what are other key risks that Supreme Ventures Limited is looking at, and how is management managing those risks?
You're right about the hurricanes and the earthquakes. And that's why we have spent so much money investing in Ghana. We're doing it for fundamentally two reasons. I mean, it's a much larger ecosystem, and when we get our game to work in Ghana, the market size there, dollar for dollar, that's a country and a business that can generate 200 million US in annual profits, right? If you get people playing at the same rate as they play in Jamaica. When you're able to do that, your hurricanes doesn't impact you as much because you've diversified. That's just Ghana alone. I mean, if we take advantage of some of the various opportunities in front of us across different countries, etc., you get the full diversification. That's the best way to manage that risk that we currently face as we speak. In terms of the other businesses, you have your redundancies that you put in place. So you back up your IT systems in different countries. That whole business continuity you look on. You have to constantly assess the business you do. So, for example, we have Caymanas. That if you don't pay very close attention to Caymanas, it can flip into a $200-400 million loss. That's a place where if you take your eye off the ball, it lose money so quickly, it make your head spin. But at the same time, you fight with it because the potential to make it into something that's bigger and better is there. If we could just get more harmony with certain stakeholders, then it'll move in the right direction much faster. But that's one risk in terms of how quickly things can go through. In the other areas, I think we have it relatively managed in terms of the finance department, how we reconcile the cash movement of cash and that kind of thing. Cybersecurity, we have the relevant experts in place. So those are the things that can potentially impact you. But I think today, knock on wood, the relevant risk measures and metrics are in place to prevent a negative fallout.
My final question, and I hand over to Damien. What, from your lips to investors, Gary, why should investors buy Supreme Ventures Limited?
You mean outside of everything you said already?
Outside everything he said.
The reality is that I don't think people really understand what SVL is now and where it's going. And a lot of people are going to be surprised, certainly by 2027. But there's a lot of hidden value in the business that I don't think many analysts in the country really appreciate. So the fact that we have our own lottery software, people have been really able to value what that is. And people aren't going to appreciate it until you have 2, 3, 4 clients on board that's generating 200-300 million US each. I don't think people value the benefit of a 35-year license when you have a third party that you're paying 20 million US to now. And they only have 6 years left on that license. And that's if you decide to use your own software, that 20 million doesn't go to the bottom line because you'd have costs associated with it. But a material portion of it can go to the bottom line because you have that software just sitting here and waiting. So there's a lot more hidden value in the business that people don't really understand, that the potential is there to be had. So when you see a stock like SVL, drop from $24 to $14, and you ask yourself a question, how does that happen? And the blip, you had a top 10 shareholder that sold 100 million shares. But those sales are done. So when you have an illiquid market and you have that amount of shares coming out in a market in a relatively short period of time, the price is going to be impacted, but that seller has finished selling. And, as I said, stock is cheap. If you want a good return, if you want probably the best performing stock for 2026, that's a good reason to buy.
Well, there you have it, folks. You heard it from Gary's lips to our ears. And with that, we'll bring today's discussion to an end. I'd like to thank our viewers for tuning in. Your support is always appreciated. Big thanks to Gary for sharing these insights with us and our viewers. And I'd like to thank Patrick and Melissa for their contributions as well. To our viewers, be sure to look out for updates on our virtual investor forum by following us on social media. We share all things forum related on our official social media pages. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Join us again this Thursday, March 6th, as we'll speak with John Mahfood, Group CEO of Jamaica Teas Limited. Keep safe, and remember, wise investors, slow and steady wins the race.